Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again as usual on the euro currency. So it was supposed that the past week should be some kind of the silence before a storm, but based on the performance I wouldn't say that. So actually week was relatively nervous. So lots of external factors have made impact on the market, which is actually has become really the challenge to make any forecasting and analysis for trading on the last week. And the coming week hardly will be better. So 2 central bank meetings, inflation report in the United States. So it will be really the bumpy ride, I suppose. So currently on the technical side, we do not have lots of changes. So monthly, weekly, and mostly the daily chart stands the same. So things that we could just discuss stands on intraday charts. Meantime, on the fundamental background, the common opinion is that Fed should take the pause in the coming week. But by some reasons, and we actually discussed it widely, we suggest that this is not the fact. And as you understand, if this will not happen, that will trigger the major reversal on euro currency. So it might be a really big plunge on the euro if Fed still will raise the rate, and because it will happen day before the European Central Bank meeting. Especially if we'll get additionally strong inflation on Tuesday and then on PPI later. So that really might be the decisive point. Actually, this is not only our opinion. For example, the Citibank also suggests that it will be a rate change in July, by the way. And mostly this is fundamental reasons. Inflation stands stubborn. We do not see really some big deteriorating processes in the economy. Yes, we have jump in initial claims, we have rising unemployment, but payrolls are strong, consumption is, well, more or less stands around the average. So in the current circumstances, we do not see really big barriers for the Fed to raise the rate once again. So we'll see. Maybe we're wrong, but just our view. Besides, we have the long-term bearish tendency, bearish background on the monthly chart, and supposedly something should happen that could trigger this downside action. And definitely it will be some fundamental factor. So the common week is full of the intrigue, and it's another intrigue that stands around US Treasury tactics, because currently it's still unclear how they would intend to get the liquidity that they need. Data that we need to use, such as reverse repo balances, Fed balance, money supply, bank reserves, all of them are published monthly. So they will be published with a big delay, and probably on the markets you will see sooner the impact of the Fed, of the United States Treasury policy. So today we try to dig this topic a bit and come to conclusion what particular United States Treasury tactics might be. So also let's take a look at the technical picture as usual. On the daily chart, mostly things stands the same. Currently we have the bullish trend. Potentially we're also considering kind of the double repo pattern, something of that sort. Targets we have specified on Friday. So first target is 108.10. Agreement resistance. Next is 108.50, 60 approximately, which is double repo minimum target, is a 50% fib level of the whole thrust. And next one is around 109, which is actually XOP of the intraday BCD pattern. These 3 targets we intend to use if market will bring no surprises and will keep the course to the upside. That's actually what we have on the 4-hour chart. Consequently, with the targets we have no problems. It means that the only thing that we have to be focused on is the validity of this upward action. And to keep the upward action valid, market has to stay above the major 618 support area. This is vital area for this tendency. Whatever retracement will be, it should not be broken through this level. It's 106, 107 actually. It's vital. So the starting point of this rally is vital for bullish context. If somehow market will totally reverse it, drop down, that will be a big sign in favor of downside continuation and reversal. So it means that for the bears, it's not many things to do right now. So you have to wait either when the upside targets will be completed. We get, I don't know, maybe some kind of negative stipple to sell here with these ABCD patterns, larger negative stipple to sell on the daily chart or something of that sort. Or you need to wait the clear signs of the failure. It means breakout for the 107. Until markets flirting around the major levels, bulls have control of the market and they keep chances on the possible upward continuation. On Friday, drop was relatively strong, so market hits our first level, 107.50 approximately. But OP of this action already has been passed, and you can see here we have some acceleration on the CD leg. It means that first level that we will consider on Monday will be conference support, it's 107.30, 27.28, and XOP target. So that will be the area that we'll start watching. When the market touches it, we will consider what the patterns are forming on the intraday charts, whether it's some reversal is preparing, whether it makes sense to take position or not. So that's the just routine work that we will do around this level. So that's actually what we have in the euro. Let's keep watching, and it seems that next week will be really a big challenge.